Welcome, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And it's always a pleasure to be here with you guys on a Friday morning when I get to let my hair down, although I don't have the bun anymore. But bottom line here is, oh, by the way, we're doing the bottom line later. Make sure to tune in for that when I crack a margarita with you guys. But anyways, Friday morning markets are down slightly. We're going to cover all the nuances in the market and what are the charts saying. Bitcoin falling, gold holding well, silver pulling back, and ultimately we might have a top on Nvidia. So let's take a look right there. Oh, man. All right, guys, over to the charts we go. Just having a little fun on a Friday. It's what we got to do here. You got to have fun in life, right? I think we can all agree in that. If you take it too seriously, you ultimately won't make it very far. Spiders, look at the S&P 500 today. So this looks like we are down decently on the day, but this is not necessarily accurate. And I say that because there was a $2 and change dividend paid out on the SPY. So you have to actually add that $2 back into the price of the SPY to get a fair value reading on where the S&P will be. Don't forget, it is quad witching. Not technically triple witching. They got rid of quad witching. But triple witching creates a lot of volume and a lot of volatility. And believe it or not, institutions use that volume to unload positions potentially. So watch for that as well. Do we see some of these bigger name stocks as we get into rebalancing as well, potentially see further downside? Nvidia is down today. We'll take a look at that. Okay, so on the S&P 500, we closed right up here yesterday, right in this range. We're down just around that $2 marker. So really, in all fairness, the S&P 500 or the SPY is looking to open flat today. Now, the NASDAQ is a little bit weaker, mainly because of Nvidia. And if we flip over to Nvidia's chart here, we'll go over the intraday first, then we'll go over the daily chart of Nvidia because that's a big deal. What we're seeing here is Nvidia pre-market is trading down over $2 more than yesterday's close, right? So yesterday, remember pre-market, it was about 140. It yesterday closed just above 131, I believe. Today, we're actually trading down. Might have closed around 130. Today, we're trading down below 128. So we're continuing to see pressure here. Valuation got ridiculous. I think we could all agree on that. It just was a matter of when was it going to finally see that pullback. Interesting that it's coming with this triple witching. That's oftentimes, again, when the big boys start to unload. And they obviously don't want to pay out all those calls that were long Nvidia. And I think that's an important aspect here, guys. Always remember that options expiration is kind of a rigged game. It doesn't mean you can't use options to your advantage, but you got to know. And basically, institutions sell 95, maybe even 99% of options to retail investors. Now, retail investors are looking for home runs. The institutions only make money when those options expire with a gain of less than the premium that was paid for those options, or if they expire worthless. So the institutions have an incentive to push a market in one direction early. They get all the call buyers to come in, and then they flush it later, making all those calls expire worthless. They take the maximum amount of gain. Just understand these rules. This is what verified investing is all about, guys. The truth to you guys, understand the game. If you want to play the game, no one's going to fault you for that. That's fine. And you can play it in certain ways that make sense, but don't get fooled by the shenanigans. That's all I say. Okay, so we have Nvidia trading down on the day here pre-market. What we can look at here is the daily chart, which put in a reversal candle. The big gap up here and the sell-off. It's not a reversal engulfing candle. To be a reversal engulfing candle, if this was the prior candle here, bear with me as I get my drawing tool up. So if we get a candle here, right, so let's just draw this in. A reversal engulfing candle must open above the previous candle, which this one did, but it also must close below the low of that previous candle, fully engulfing. That's a reversal engulfing candle. This one was close yesterday, but this little tail down here, we closed just above it. Now, the difference maker is this, and this is why this stuff is important, because you might say, well, what's the difference? What does it matter whether it was reversal or reversal engulfing? Well, it's probabilities, right? And that's what technical analysis is all about. And so the probabilities, and I went over this in Trading the Close yesterday, is basically the difference of a 60% chance of downside, which is what this is. So this is 60% chance, and we're seeing follow through today, which if we get the follow through in the confirmation, probably ups it to about 65%, versus a reversal engulfing candle that's about 75%. And that's a big difference. I mean, in terms of probabilities, and if you do 1,000 trades, it's a big difference if you win 600 times versus 750 times, right? So keep that in mind. Now, in terms of downside, where could this potentially fall? Well, there are some gaps along the way, right? So if we look at this chart, today I'm going to be watching the 125 level right there. That's a gap fill. There's an additional gap fill right in here, which is right around or just below 120. But really, if we're talking about a bigger correction, this area right here would be the spot to watch, which is a pierce of the even number of 100. It's right where those last earnings came out. And so this run was the result of the earnings move, an incredible move up on a $3 trillion company. But a reversion to that level would kind of be your big level to watch, right in there just below 100. All right, now a couple other things to go over here in the morning session that are catching my eye. Number one, the dollar yen continues to be on my high alert level here. And again, you're not going to hear this talked about much on CNBC, Bloomberg, or Fox Business News, but this is a big deal. We saw last night, and this is a big headline, guys. Most people just gloss over this stuff, but when you understand the repercussions, you take it seriously. The U.S. basically put Japan on watch as a currency manipulator. They didn't label them a currency manipulator, but they put them on watch. And basically, that's a warning sign to Japan to not manipulate their currency, which again, the problem is they had to do it here because the yen was weakening too much and they flushed it down here. But look, we've just had that breakout above this closing level, new closing high. The last, I think it was 1986 was the last time we had a higher close on the dollar yen than this. So that's a long time ago. And now we're even creeping up more. We could be headed up quite a bit. And ultimately, Japan will be forced to intervene if this happens. And that's what the U.S. is kind of warning them to do. They're saying, don't do that. And when Japan intervenes, I've talked with you guys about this before, they sell U.S. dollars and they can sell U.S. debt, which is basically one and the same. And that, again, then creates hardships over here for the Fed continuing to be diligent on keeping interest rates where they want to do. So there's a lot of these little nuances that, again, you're not going to hear about in a lot of places, but these actually mean a lot. Yesterday, again, we talked a little bit about what's going on in France and how the EU is warning France to get their debt under control. All these little fires are starting to pop up around the globe, and they ultimately can be a domino effect. One domino goes, and the whole entire globe goes with it. And it's a house of cards built on debt and derivatives. And literally, we're talking like 700 trillion derivatives basically just in this country alone. Insane amounts of leverage upon leverage upon leverage. You know, it is honestly scary. But listen, maybe nothing of this happens. My goal is to let you guys be fully informed on what is going on. All right, so dollar yen is on my high watch list. The 10-year yield down ticking a little bit today, just coming back in. To me, this is starting to look like a bear flag, right? So we had the retrace to the scene of the crime. You broke down, you retraced, then we came down here, and then basically what we're starting to create is a sideways consolidation pattern, which again is bearish consolidation. I still think yields are going lower, right? I still am long TLT with members of smart money stocks and ETFs. We're still in the money nicely, and TLT, remember, goes up when yields go down. So that's why you buy TLT if you want to have exposure to those yields going down. All right, a couple other charts here to look at. The US dollar continues to be very strong. Now, this is kind of interesting, right? We've seen yields, the 10-year yield has been coming down, but the dollar's actually been strengthening. And this is interesting. So remember, the dollar is not a proxy of what you and I in the US can buy. It's a proxy of what its value is relative to other currencies. And so what we're seeing is the Swiss National Bank yesterday cut interest rates again. We saw the EU cut interest rates. We saw Canada cut interest rates. Everyone around the U.S. is starting to lower interest rates. What that does is weaken their currencies and by default strengthen the U.S. dollar. Remember all that talk 6 months to 12 months ago about a dollar, basically a dollar collapse? Not so fast. And this is something I warned about back then. There was so much hype on social media, de-dollarization as it was called. it just isn't happening. Not right now. Not to say it's not going to happen in 10, 20, 30 years, but the dollar is still the cleanest shirt in a nasty looking hamper, right? And that's the nature of this. So the US dollar today is actually right up in this range here. It's at a little bit of resistance right here, but if it breaks through, you have that secondary level to go. And if that breaks out, then the dollar gets real crazy in terms of its relative strength. Now, this is, by the way, when everyone is cutting interest rates, it basically can give the green light to the Fed to cut interest rates, which is my guess why we're seeing the 10-year yield go down, but the dollar strengthening, right? So if everyone else is lowering interest rates around you, you almost are forced to keep pace with them in a way. I mean, you could be a little bit of a laggard, but you can't be too much of a laggard because otherwise, again, the US dollar strengthening too much is not that good for trade, right? It's not that good for goods coming in and so forth. And again, that's just something you have to be aware of. All right, so on to the next chart here that I want to take a look at. A couple other charts to go over. One is a chart. In fact, let's look at Tesla because I know a lot of you guys love the Tesla chart here. So what we have on Tesla is this channel. Okay, now one of the things I'm seeing here is a potential bullish move on Tesla coming up. This again had a great reversal candle right here. And then since then, you could almost make a case that it's making bullish consolidation. Now, again, upside is somewhat limited because you have this level right up here, right? We have all these levels, so you have to look. But I do think that you have a potential move close to $200 per share on Tesla. Now, listen, if the stock market really collapses, then that could be off the table. But for the most part, this chart right now, just looking purely at the chart, that looks bullish to me. Another interesting idea here, guys, this is something that I was really thinking about yesterday into today, is that what we've seen is we've seen kind of this compilation of all money flowing into these magnificent six, right, the trillion-dollar names, mainly the top three, right, Microsoft, Nvidia, and Apple. And there's been this over-allocation where we've seen good quality companies like Zoom, for instance. And again, you might disagree that it's a good quality company, but you can't deny that they're basically it's trading at a 10 PE. They're going to grow a little bit. It's decently valued, but it was a boring stock. It was doing almost nothing, right? So if we look at Zoom here on the daily chart, we can see that for the longest time it's been in a downtrend. There's your Zoom chart, right? So here's your Zoom sideways chop. And so people that were sitting in Zoom were like, man, oh man, they were getting FOMO. They were saying, look at the run that Nvidia is having. I'm going to take my money out of Zoom and go chase these other stocks. And you could even see that to a T, in my opinion. When we zoom in on this, look at this move. Remember the last, last week when Nvidia was just going up every single day. And look at what Zoom was doing. Money was just getting sucked out. There was no news on Zoom here. But look, as soon as Nvidia starts to drop yesterday, what does Zoom do? It goes up $2. And so what I think is going on here, or what their opportunity is for us, is there's what's called a reversion trade. Okay? And what that is if you see these mega caps coming in, that money is not scared enough to leave the market, but it's going to look for where it's been sucked out of, and it's going to go back into those levels. So something like Zoom could have some upside because of that. Another interesting idea here, guys, is Netflix, right? So Netflix, to me, huge epic resistance up in this range, right? So we have double top, we have this trend line right here. So right around $700, huge resistance. Now remember, this company dropped about 9% on earnings and then somehow miraculously ignored those earnings and then started to go right back up and made new highs. Something's weird there, right? So earnings were not so good, stock drops 9%, but then it recovers and just goes straight up because money was focusing in on the best names. We saw Meta do the same thing. Netflix, we saw Apple, right? All of these names, the money was going into a select few. Now, what did that do to its competitors? Nvidia, right? Or not Nvidia, but what did it do to competitors? Paramount. Paramount, again, look at the chart on Paramount. Down, 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 down here, right? So it's been under pressure because all the money's being sucked out of Paramount. Now, yesterday, we saw a little bit of an uptick in Paramount right off technical support. What about WBD, Warner Brothers Discovery? Same sort of thing here. Bear with me here as we go back to one chart on this, but let's go back here to WBD. But same thing. I mean, look at this chart. It's insane. If we go in here, and this is the monthly, but we'll go into the daily, but same sort of deal. It's been in this downtrend. So the hypothesis, the thesis, which is what I'm thinking, is that Netflix sucked all the money out of these other plays, so the WBDs, the Paramounts, etc., and it went into Netflix. But now you have Netflix at a double top at a key level of resistance per trend line, and if there's a reversion trade, Netflix in theory should come down while these should get some sort of technical bounce. Just a thought. And again, this is what I do, folks. I think about these things outside of the box. I try to come up with these ideas ahead of time. And listen, it might not work, but I offered this yesterday on the financial news on verifiedinvesting.com. You might have seen it. But basically, there's what I would call a pairs trade here. Like you could be short Netflix up here and be long Paramount and WBD, Warner Brothers Discovery. And listen, if the markets keep going up, Netflix probably goes up, but it probably also lifts those, so it protects you. But is there a reversion trade where the WBDs and the Paramounts go up and you also get Netflix to come in? Maybe, maybe not, but it is an idea right there that I wanted to pass along to you guys that are valid and awesome watchers here at verifiedinvesting.com. All right. Let's do our spin of the wheel here, guys. Let's do that right now. Yesterday was a year of free of NordVPN. So we're going to spin this right now and find out. Then we'll do the spin of the wheel to find out what we're giving away on Monday. Remember, the Wheel of Appreciation is to show my appreciation and everyone's appreciation here at Verified Investing for you guys that come in every day and support us here and support what we do. All right, Terrafong 9816. Congratulations. All right. So well done there. Reach out to Lawton at verifiedinvesting.com and you can claim your prize. And again, remember, folks, the way you get entered to win these daily prizes, share the stream on one of your socials and then post as a comment where you shared it. And then also make sure you're following Verified Investing either on YouTube or on Twitter/X. Okay, next up, let's go over and spin our wheel here, and then we'll get right into the next segment. Woo. And don't forget, guys, 1 p.m. today, I'm going live with Ben here, my head trader. We're going to be talking markets. It's called The Bottom Line. It's a show there, and it'll be live. You can also watch it on rerun on YouTube as well. The winner today, Smart Money Stocks and ETFs Trade Alerts. Awesome there. 3 months value, $450. That will be given away on Monday. All right, guys, we are going to take just 30 seconds to take a look at what Smart Money Crypto is in and it involves. Here it is. Hey everybody, my name is Gareth Soloway and this is Smart Money Crypto. In this service, you're going to get trade signals, buy levels, sell levels, everything you need to be able to conquer the crypto markets. In addition, videos almost every single day, probably 6 days a week. So literally, you're going to get them even on the weekends. In addition, what do? I post up chart levels, constant flow of information from me to you, morning, noon, night, weekends, whatever it is. I am there scanning charts, finding the technical analysis and data points to give you. This isn't about meme coins. This isn't about hype. This is the data just for you guys to be able to conquer the crypto markets. All right, guys, we are back. Right into crypto we go. Take a look at Bitcoin, guys, and I've been guiding you step by step on Bitcoin of what to look for. So we know we closed below these two trend lines the last 3 days, but we had not confirmed yet. Today, you can still confirm. Confirmation, again, is all about probability. Let me explain. When you confirm a move where you have to close below the lowest close right here, and again, today we don't know because we don't close for many, many hours to come, but should we confirm, the odds of downside increase dramatically. When you close below a level, let's do it right here. Let's draw a little bit of thing. So let's say you come down here and you close below a level. What that tells you is that probabilities are about 60% that there's downside continuing. So it basically favors it, but really not by much better than 50-50. Once you have a confirming candle that closes below that low, it now raises it, same thing like we talked about on these other metrics, to 75%. And that's why confirmation is so, so important, folks. It really ups those probabilities that you have something bigger in the works. And essentially, as I've explained to you guys before, institutions play lots of games. It's almost like their goal that they're just screwing with us when we trade. And so they get people to go short and before confirmation, and then they whip them out when they rip it the other way. Once something has confirmed either as a breakout or breakdown, it basically means that too much money is involved to kind of change the trajectory, and it's very unlikely at that point that the institutions are playing games. It's more a real breakout or a real breakdown. And that's why the confirmation signal is so important to understand and learn. All right, so the question is, will we confirm today? We don't know yet. We have to wait for the daily close, but it is something that I am watching like a hawk here on this chart of Bitcoin. Now, if we do move lower, there's a level around 61,500 that's going to be key support. But in reality, once we confirm, I would say that, yeah, we'll bounce down here. I mean, nothing goes straight down, but in general, we're probably headed down towards the low 50s. Now, if for some reason we don't confirm and can get back above, the bullish sentiment, the bullish bias returns. And so it goes from basically 60% back to favoring the upside maybe by 60 to 70% again. And this is what technical analysis is. I mean, literally every day, one of these candles is a new piece of the puzzle. And it allows me to kind of redo or reshape my probabilities to give me the most likely outcome. And when those outcomes become, let's say, 80%, or greater, that's where a trade is initiated. That's how you analyze and trade charts of any asset, by the way. Crypto, stocks, commodities, doesn't really matter. One quick chart to look at. Let's take a look at Solana here. Haven't looked at this one this week with you guys. Solana has broken this upsloping trend line right through here, right? So again, if we look at Solana right here, we have broken below that line, which means we likely are coming down towards this level here, right? So you're looking at around the 120 level, $120 level as support on Solana. Now ask yourself this, did Solana confirm? And it might be hard for you guys to see. The answer is technically it hasn't confirmed yet either. But if it does, then it just even reinforces the odds that it's going to 120 and possibly even lower. But for me at least, maneuvering and trading in this range is starting to get more interesting. No doubt about it. Smart Money Crypto members get all my buys and my short alerts via that service. Next up, let's take a look at gold. Gold actually did something very interesting yesterday. It closed above this downsloping trend line. Now again, ask yourself, did it confirm? The answer is no. So again, you don't get too crazy about it. Like when something closes above, a lot of people will just like FOMO in. I don't do that because I've been burned too many times doing that and not waiting for confirmation. So I wait for confirmation and then I look for a bull flag. Right now we have a flat day on gold, so we don't know if it's going to confirm yet, but it's something that I will cover obviously in my nightly videos to commodity, Smart Money commodity members. Looking at silver here real quick. Look at silver's channel. Yesterday we went right up there. Today it's getting rejected off that channel. We have short-term support right here, right? If that holds, great, then I think you can break out. If that doesn't hold, then you break down to the lower end here. I myself am looking to buy somewhere in this vicinity, so I'm going on the idea. And partially, it's not just like it may not pull back there, but I'm willing to take that risk because I have so many other trading opportunities as an investor and trader that I want the best price possible versus chasing something and then getting fooled if it doesn't do that and comes back into these levels. And again, a lot of that comes down to risk reward, personal, risk tolerance, and also just understanding that there's always another trade around the corner. I mean, so many people are like, oh, you missed so much on that trade, or you did it. It's like, who cares? Because I just did another 10 trades in the last few days, right? I mean, that's the beauty of it, is that I've literally missed hundreds of thousands of trades in my career. It's about which ones you catch, and are you catching good trades. Okay, a couple other charts here to look at. USO continues to climb here, or oil continues to climb. It is getting close to this major level, guys. That's a big level right there, 82 to 83. High short probability of a pullback, right? So if we can just bounce up here, basically another $1 to $2, I would expect a big rejection off this back into the mid to high 70s at very least, maybe even the start of a bigger move to the downside. This is a retrace to the neckline of a Head and Shoulders. It's also an upsloping trend line. Two trend lines meeting, right? So if you have two trend lines that meet, that price point is always going to be a better resistance than if it's just one line by itself. Always good to remember that. It's a multiple factor situation. Palladium, 3 cheers for Palladium, guys. You guys know I've been championing Palladium. Take a look at Palladium today. Big up move. We're now, just since I started talking about this to you guys, it's had about a 10% move to the upside. I wouldn't call this a breakout yet. It's not a breakout, but it certainly is great to see the price action. And I kept on making this case. Platinum is 30 times rarer than gold. It's trading at literally levels that we haven't seen since 2016 to 2017. It's a dollar. You know, if you believe that the Fed's going to print more dollars, this is the way to play it, right? You buy these cheaper metals, and if I zoom out, I want to just show you how low it is on the chart. I mean, incredible where it was and how low it's been, right? It's all the way down in this range. So in any case, something to watch there. Now, just lastly, natural gas. Natural gas is upticking, but it did break this key level here. So we did close below, still no confirmation, but we're watching today. Does it confirm the breakdown? If it confirms the breakdown, we're going down here. And you guys know that I've said that I did think it was going to break here and eventually head down to the 250 marker on nat gas. All right, so that's really where it is. I actually have to get going, guys, because the trading floor is just about to open on the Apex Live day trading room, which as always is a rock star status. Yesterday, I think we had 5 trades, 4 winners, 1 flat. Amazing action in that Apex Live day trading room. If you ever get a chance, there's a one-day pass you can do just to come in and check it out. It's well worth it. The education alone in there is worth its weight in gold. You guys have a great afternoon. Thank you so much for joining me. We'll talk to you later. Take care.